Third item, amount credited to P&L account from revaluation reserve, or that is already taken. Next item, agricultural income. Agricultural income 2,85,000. It is to be deducted because expenditure toward agricultural income was added back. So income of agricultural income, as it is related to section 10, has to be deducted. So agricultural income, that is 2,85,000. Then LTCG exempt under section 1038 as expenditure on LTC depreciation other than on revaluation of assets. Which part is related to revaluation of asset, that has to be deducted. So how much this is? Total depreciation was 3,25,000. 3,25,000 minus depreciation and revaluation of asset is 1,23,000. So this item is to be considered here. That is 2,02,000. That is depreciation on other assets. And last item, you see other information part. In page number 20, the company had brought forward business loss of rupees 1,86,000. It has brought forward loss 1,86,000, and the unabsorbed depreciation is 1,47,000. Of these two, whichever is lower, it is mentioned here. That is in point number E in page number 19, amount of loss brought forward or unabsorbed depreciation, whichever is lower, as per books of accounts, have to be deducted. So brought forward loss is 186 and unabsorbed depreciation is 147. So lower is 147. So this 147 is to be deducted. Unabsorbed depreciation and brought forward loss, comma, whichever is lower. So brought forward loss is 186 and unabsorbed depreciation 147. So unabsorbed depreciation is to be deducted. That is 1,47,000. So we have taken here 5 items to be deducted. Taking the total, we shall deduct. What is the total figure? 8,80,700. And if we deduct, what we get? We get 33,41,200. And this is our book profit under section 115 JB. This is our book profit. We have to compute this, and we have computed. This is the ideology how from the net profit shown in the P&L account we can compute book profit under section 115 JB of the Income Tax Act. Some items are to be added back, some items are to be deducted, depending upon the details discussion made in page number 18 and 19. Now we have to compute whether MAT liability is applicable in the case of TK Limited or not. For that purpose, we have to compute tax on taxable income under the normal provision of the income tax, that is on 27,85,000, and tax on book profit as per MAT provision, that is 33,41,200. We will then decide what to do. Let us proceed. Now we will be going on to the next part of the solution, that is applicability of section 115 JB 2021-22. For that purpose, we have to compute tax under normal provision of the Income Tax Act. First part, A, tax liability under the normal provision of Income Tax Act, colon, tax rate under the normal provision. You know that the net profit of the company as shown in the P&L account 20, it is given in the problem. You are required to examine the applicability of section 150 JB under the Income Tax Act, assuming that the total income computed under the normal provision of income tax is 16,25,000 for the said previous year. So tax on rupees 16,25,000, tax on 16,05,000 at the rate of, you have to apply the rate. What is the rate? You can assume the rate 30% or 25% as you prefer. Say we are considering 30%. So right, assuming the gross turnover exceeds rupees 400 crore, that is rupees 16,25,000 into 30%. It comes to how much? It comes to 4,87,500. Add surcharge within bracket, taxable income not exceeding rupees 1 crore, only 16 lakh. So no surcharge, surcharge nil. Add health and education at the rate of 4% on rupees 4,87,500. It comes to 19,500. So tax liability is how much? Under the normal provision, we can see here 5,07,000. Now B, tax liability under section 115 JB, tax on book profit at the rate of 15%. That is rupees. What was the book profit that we computed? We have computed book profit 33,41,200. 33,41,200 into 15%. It comes to 5,01,180. 5,01,180. 5,01,180. Add surcharge is not applicable. Surcharge is not applicable because our taxable income is only 33 lakh, not exceeding 1 crore. And then health and higher education says on 5,01,180. That figure is how much? 20,047. So we make total here. The figure is 5,21,227. Tax liability 5,21,227 under MAT provision. Whereas under the normal provision we see it is 5,07,000. So here we see that the tax liability under the normal provision of the Income Tax Act is 5,07,000, which is lower than the tax liability under MAT in terms of section 115 JB. Hence, MAT liability shall be applicable in case of TK Limited. So we have to write here. Here it is seen that the tax liability of TK Limited is lower than tax liability on book profit in terms of section 115 JB. Hence, the MAT provision shall be applicable and book profit 33,41,200 shall be the deemed income of TK Limited for the AY 2021-22 and accordingly, MAT liability 5,21,230 bracket rounded off. Okay. However, TK Limited is entitled to enjoy tax credit under section 115 GEE for MAT liability by paying excess amount of rupees 14,230 bracket. How much this comes? 521,230 minus normal provision 5,07,000 by paying excess amount of rupees and this sum of rupees 14,230 shall be allowed to be carried forward for credit for 15 years from the end of the AY 2021-22. 2021-22. So this is the entire picture that we have discussed. One thing I have failed to highlight, that is this tax credit of 14,230 shall be allowed to be carried forward for getting credit, and this credit will be available in the year when the company will pay tax under the normal provision of the Income Tax Act. Only in that year the credit will be available. Suppose this 21-22 assessment year, we see that the company is liable to MAT, for which it has paid excess amount of 14,230. In the next year thereof, say 22-23, it is seen that the normal provision tax liability is more than MAT liability on the basis of book profit. So in that case, the company will have to pay tax on normal provision of the Income Tax Act as it is higher, and while paying normal tax liability under the normal provision of the Income Tax Act, in that year the company can have the opportunity to enjoy tax credit for which it has earlier paid excess amount as MAT liability. This is the details of the provision of section 115 JB and 115 JAA. This is very much important. And one thing, this MAT liability is applicable to every sort of companies, whether it is a domestic company or a foreign company. They are liable to MAT provision under section 115 JB, as we have computed in the problem. So we don't have any much time today, dear students. If you have any problem onto this item, you can feel free to tell me or to ask me.